Hello students, let us go through the introduction to accounts today. Here we know that in olden age we always used to do transactions basically in terms of goods. That is, we give goods and we take goods. So that was called as the barter exchange. Basically there were no money involved in it. But later on there was development wherein currency came into picture and money became very important. Now, whenever we do transactions today, each and every transaction in our life includes money. Also, there are transactions wherein there are no money involved. So, we could name them as economic transactions and non-economic transactions. Let us take up examples for the economic and the non-economic transactions. Economic transactions would involve all transactions which you do in your life which involves money. For example, a boy goes to a bookkeeper's shop and from there he buys a book. In turn, what he gives is money. So here he takes books and he gives money. So here there is something that he is doing transaction and which is economic in nature. Similarly, if you take another example, suppose you visit a doctor. When you pay him the consultancy charges, that is something that you are paying money for, the services that he gave you. So here again money is involved. So here we also have another transactions which do not involve money. For example, a mother cooking food for his child. Here, she is not going to charge something from his child. So here, what it basically includes is there is no money involved in that transaction. So here what we are going to see is all transactions which involve money, because accounts deals only with transaction which includes money or money's worth. Now, we also have something like bookkeeping. Now, what does this bookkeeping mean? Bookkeeping means recording all the transactions that you are taking in your day-to-day business so that you could refer to it in future. So bookkeeping basically deals with recording the transactions, whereas accounting deals with recording, summarizing, classifying and analyzing all these transactions as well, so that you know the financial position of the company. Bookkeeping could also be called as a science or an art. We know that science is something which is a systematized body of knowledge, which includes principles, conventions, which we need to follow. Similarly, here also bookkeeping is based on certain principles and conventions, concepts of accountancy, which we need to follow. And then only will I get a proper and accurate position of my organization or a business. Now, what basically an art is? Art is just the application of skill. Now here also, as we have in bookkeeping, is just the art of keeping the books in such an orderly manner so that it becomes useful for you in future. So here we can say that bookkeeping is nothing but a science as well as an art. Science or an art of correctly recording in the books of accounts all the business transactions that results in the transfer of money or money's worth is what is called as bookkeeping. So here the most important thing is that the transaction must have some money value. Unless that, we cannot record it into a bookkeeping. So basically the objectives of bookkeeping would include ensuring the correct and the complete record of all the transactions which involves money, ascertaining the financial effect of the transactions on the business. What transactions have effect on the business, that also we could find out with the help of bookkeeping. Providing data to the various users. We have various users including the internal users as well as the external users. The internal users would basically be the proprietor, the board of directors, the managers. They are the internal users of the organization. And the external users would include the employees, the consumers, the government. So we have all these users who are very important for us so that we could be there in the society with them. We also have to give or have to comply with the legal compliances. That is, we have to have the Companies Act, we have to have the Indian Contract Act, all these contracts, the Securities Contract and Regulation Act. There are certain laws which have been passed in our country and we need to follow them. If we do not comply with these laws, we need to pay penalty. So, we really have to have a very good bookkeeping system so that it helps us to know the financial position of the company. Now, what is accounting then? We know that bookkeeping is just recording the transactions. But recording is not just enough. What we need to do is analyze those transactions. And when we say analysis of all these transactions, it would include accounting. So accounting, according to the American Accounting Association, it says that the process of identifying, measuring and communicating the economic information to permit the informed judgments and decision by the users of the accounts. That is, it is basically a process of recording, classifying, summarizing, analyzing and interpreting the financial transactions and communicating the same to the users of such information. So, recording basically would include what has happened, that is, what kind of transaction have we entered into. Summarizing would be just to summarize into two accounts that are getting affected. As in accountancy, we will be dealing with double accounting system of accountancy. Double account, in short and in simple language, would mean something that each transaction has two effects. One going out, another coming in. So something that goes out from the business, so something that comes inside the business. So that is what we are going to learn later in accountancy, that is the double accounting system. Then we have to classify it into the different accounts. We have different types of accounts in accountancy. Accounts would be divided into two, personal and impersonal. Personal would be the names, the companies, the banks that we are doing transactions with, like Mr. Krishna's account, like Bank of India, like any other association or maybe University of Mumbai. So here all these are persons for us when we take into the accounting sense. We also have the impersonal accounts. They are divided into two, the real account and the nominal account. Real account would include all that would be with relation to goods and your assets. Here goods means the thing that you're dealing in your business, and assets means the money that you have invested into so that you could utilize those resources and conduct your business. So here real account is including all your goods and assets as well as your liabilities. So what are nominal account? Nominal account would include all your expenses, your losses, your incomes and your gains. So when we talk about all these three accounts, that is, we have the personal accounts, we have the real accounts and we have the nominal account. We have a certain golden rule of accounting here. The first rule with regards to real account is debit what comes in and credit what goes out. That is, whatever comes in business would be debited and whatever goes out from the business would be credited. Similarly, in nominal account, the rule is debit the receiver and credit the giver. That is, this would be the rule for the personal account. That is, whoever receives it would be debited and whom we are paying, that is, we are the giver, so we will credit our account. So we have to think all these things from the point of view of our business. Also, we have the other type of account, that is the nominal account, wherein debit would be all your expenses and losses and credit would be all your incomes and gains. So here we have the three golden rules of accounting. First one is real account, debit what comes in, credit what goes out. Second would be your personal account, debit the receiver and credit the giver. And third would be your nominal account, where you will be debiting all your expenses and losses and crediting all your incomes and gains. Now all these accounts are very, very important, and this is how we will be summarizing it and analyzing what transactions are there in our organization and how all these transactions are affecting our business position. So the main aim of, or the importance or the objectives of accounting, we could say, is first to ascertain our profit and loss. Everyone is interested to know how much have the business earned profit or how much loss have they earned or incurred in a particular year, and that could be found out with the help of accounting only. We could also find out the financial position, how progressed, what kind of growth have we done, the development. All these things could also be found out through the financial position. We could also find out the owner's equity. Equity are all basically the equity shareholders, those who have invested money in our particular company. they would also like to know what the position of the company is, whether they are secured, the amount of money that they have invested is secured or not. It also helps in decision making. That is, in future, if they want to change or they want to implement some new plans and policies, that could also be taken up with the help of the financial position, which is given by accountancy only. We could also correct the errors and the frauds, the mistakes that have been done, so that we could, when we tally our accounts, we really come to know whether we have correctly entered it or have we have any mistakes or not. We also have a proper control over the cash flows, because cash flows affects the liquidity position of the company. And if that liquidity position is getting affected, we could have a proper control over our cash flows. Now we could go through the importance of accounting. Accounting, as I told you, is very, very helpful for the businessman. It helps in comparison, that is, whether the business has progressed from the previous year or not. Also, it helps in decision making, as we just discussed. It helps to have a proper control on the business activities as well. So, to have a proper control and to make proper decisions, we really require accounting. It also helps in proper planning. It helps us to know what the financial condition of the business is. And also, as a legal record, we require accounting. It is also very useful to the outsiders. First, if we discuss from the outsiders, it would be the government. The government, the organizations pay to the government taxes. Now, the government would really be very interested to know how much profit have a particular business organization earned. So, accordingly, have they paid the taxes on time? Have they paid the benefits to the employees on time? That is the bonus, the employees' provident schemes, the money for that, the pensions. So, all those have gone to the employees on time or not? If they are asking for the deductions, they need to pay really those things first, and then only can they ask for the deductions. So, the government is basically concerned with the amount of profit that they have earned, and also whether they have complied with the legal standards that we have laid down with respect to all the acts that are passed. That are the Income Tax Act, the Companies Act, the Indian Contract Act. So, all these acts have been complied with when we are talking about the accounting principles. Also, it is very, very important for the investors. Investors are those who give us money. That is, the money of the investors are only used as capital in the company. So, when the capital is there in the organization, the investors are worried whether the capital is really utilized properly or not. There is efficient and effective use of resources or not. So, for them, they also want to know the annual report. That is, they want to know the financial position of the company at year end. So, it's very useful for the investors also to know what position the company is at. Also, to the employees. Nowadays, we have new schemes like ESOP coming up in the organization for the employees. That is, something like employee stock option plans. They are the plans basically for the employees so that they have active participation in the organization. They work as if it's their own organization. That is, more the profits they earn for the business, the more the share prices rise in the market. And that's going to be useful for them only, because in ESOP, they are given certain amount of shares when they are signed for the job in the particular company. So here, the employees also work hard to increase the profit of the company. So this is another thing wherein the employees get encouraged to work hard. Then also the students, the research scholars, they also require the data of accounting so that they could compare and do research and development in that field. So, accounting is really very important, whether it be an outsider or whether it be an insider. We also have different branches of accounting. Now, just going through the branches, the first and the main important branch of accounting is financial accounting. When we talk about financial accounting, it basically shows us the financial position, as the name suggests. That is, it shows us what profit and loss the company has earned, what is the balance sheet position, which gives a very true and a fair view of the financial position of the company. We also have the next type of accounting wherein we have the cost accounting. We know that cost is really very important for us because the total cost that we consider, we add up our profit margin and then we decide our selling price. So if our costs are totally high, we cannot compete in the market because the competitors would always have a very competent price in the market. And if we have to stay in the market, we really have to have a very good control over the cost part of any company. So, when costs are considered, For example, if we take up that the cost per unit is 75 rupees and the profit margin that we add is 25 rupees. So the selling price per unit in the market is 100. Now if suppose I have a very good control over my cost and this 75 rupees per unit comes down to 70 per unit, and if that's the case, obviously I cannot change my selling price, because if I do so, my competitors would take up my market share. So I cannot change up my 100 rupees, but I could have a very good control over my costs so that my profit margin increases. Now if it decreases to rupees 70, so obviously my profit margin increases from 25 to 30 rupees, showing that we are effectively and efficiently using our resources, wherein we have a very good control over the costs. So this cost accounting is also very important because this determines our profit margin. Also we have the next field of accounting, that is management accounting. Management, as the word suggests, is basically useful for the top authorities, that is the board of directors, the managers, because they need to take up the decisions which are there for future. Now, according to that, the basis of financial and cost accounting, they prepare reports so that they could decide what could be done in future. So here we have something like management accounting. Nowadays, there are some new concepts coming up in terms of branches of accounting. We also have human resource accounting. We know that human resource, that is our manpower, is the most dynamic kind of dynamic in nature, and we really have to have a very good control over the human resource. So nowadays we also have accounting with regard to human resource. Human resource is considered as a very important asset for any organization. It is the one which has brains, and the other resources are used by the humans only to generate profit for the organization. Obviously, we need to have this human resource accounting as well. The other concept which is coming up nowadays is social responsibility accounting. Our organization works in a society. So when we work in a society, there are certain drawbacks which are there in the organization. That is, we may have some kind of pollution in the organization. We have to do something good for the society as well. And that could be done with the analysis of social responsibility accounting. So, just to summarize what we did in branches of accounting, it would be financial accounting, it would be cost accounting, the management accounting, the human resource accounting, and also the social responsibility accounting. Now here, basically first what we did was just the barter exchange of goods. That is, goods though and goods low. But now that's not the thing, because after that we developed currency. And currency came up in the market. Now what we do, all transactions are in terms of money. We have also seen in our history, in the manuscripts and everything, that there were many things, numerical records which were found in the farms of the old Greek and Roman empires also. In India, we had the Mahajanis, we had the Marwanis, we have the Bahikata which was there and which is still going on, and they were the famous ones at that particular time. So we could say that accounts is not a recent concept. It is something which has been seen in our civilizations as well. It is something which is almost 4500 BC old. So something which we really is important in our life. So when we talk about accounting, the first book of accounting is journal. That is the book of prime entry. Now whatever the transactions are, you need to show in and you need to record it in a particular book. And that first book of accounting is known as journal. We could say that journal is something which is the main book of accounting. Without journal, the further process of accounting cannot be undertaken. So here we would discuss the format of journal. Let us now discuss the format of journal. Journal is divided into the following columns. The first one that we have is the date. As we told, the journal is the book of prime entry. It is the book wherein all the transactions are recorded in a chronological order, that is date-wise, so that in future we could refer to it according to the year and according to the month as well as according to the date. So here the first transaction, the first thing that we need to enter in journal is the date column along with the year. It is usually in the form of date, month and year. The next column that we have in journal is the particulars column. Here we actually write down the accounts which are getting affected. That is the debit account and the credit account, along with a small narration as to what that particular transaction is explaining. Next what we have is the LF column. that is the ledger folio column. Now this basically the page number is written of the ledger account which we prepare just after the journal is over. Ledger gives us the correct balances of each and every account which are later on posted to the trial balance. From the trial balance we actually get to know what our financial position is. That is, from trial balance we prepare our trading account, our profit and loss account and our balance sheet which shows us the financial position of the company. After the particulars and the ledger folio number, we have the debit amount column. This represents the amount of the debit account that we have entered in the particulars column. And the last that we have it is the credit amount column. Here we write down the amount for that particular account which is credited, which we have already written in the particulars column. To know this thing more correctly and accurately, let us take up an example. Let us take up a book of Mr. Krishna. Here on Feb 1st, 2013, Mr. Krishna brings in cash for rupees 5,000 in the company. That is, he is bringing in cash as capital in the company. So here there are two accounts which are getting affected again. The cash is coming in the company and the capital becomes a liability for the organization. So a liability basically is something that we need to credit because they are our creditors now. So here what we have is money bought in cash, which is basically we are going to use it as capital. So here cash comes in and to Krishna's capital, that would be our entry that we will write in the particulars column, along with their respective amounts in the debit column as well as the credit column. We would write a short narration below this saying that being cash bought in as capital rupees 5,000. Suppose let us take up another example. Mr. Lala has given us goods on credit. That means we have purchased goods on credit from Mr. Lala, maybe rupees 1 lakh. So here what we have is, here the goods are coming in. So since it's a real account, what comes in needs to be debited. So goods account debit. Basically we write it as purchases so that we could differentiate whether the goods are coming in or going out. If it's going out, it would become a sales. So here debit goods means purchases. And since we are buying it on credit from Mr. Lala, he becomes a creditor. So we again need to credit him with the same amount, that is 1 lakh rupees. Another example, again we have to write a very short narration for the same, being goods purchased on credit from Mr. Lala. Another example, maybe we have paid carriage for that particular goods to reach to our office. So when we need to pay carriage, it's a kind of an expense for us. So when it's an expense for us, it's something that we need to debit. As we know, in nominal, all expenses and losses have to be debited. So here the carriage account will be debited, and since we are paying them in cash, cash is going out. So whatever goes out needs to be credited. So here the journal entry would be carriage account debit to cash account with the amount say rupees 1,000. So that amount, respective amounts need to be entered in the debit column as well as the credit column, along with the narration in the particulars column being carriage paid in cash. Just another and the last example that we take up would be a kind of furniture purchased in cash. Now furniture is something which is an asset. When assets comes in, again it's goods or assets, a real account, what comes in needs to be debited. So furniture account debit, and we are paying them in cash again. So to cash as cash is going out, along with the narration being furniture purchased in cash for rupees 20,000. So this is how we generally enter all the entries in our journal. Journal being the important book of our accounting, we need to maintain it chronologically so that it helps us in future to know what the position of the company is.